Hi there, you're watching Market Cafe on ET Now with me, Shreyanti Singh and Priyanka Uppal. And over the next 1 hour, we'll get you news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, let's take a look at the US markets. And Priyanka, it looks like it was a bad day as well as a week coming in for Wall Street.
Morning, Shreyansi. Morning to all our viewers. Absolutely. In fact, if you talk about Indian markets, this is the long unwinding. The biggest long unwinding what we saw in 48th session was yesterday. So, of course, a big crackdown, not just in Indian markets, but yes, it was a shaky start to October, what we could see clearly from other markets also. Now, mounting geopolitical tensions, that has actually led to a shaky start, not just in the US, even mixed bag coming in from the Asian markets also. But let's just firstly track US markets. What happened yesterday? Now, Dow fell 0.5% yesterday. S&P slid nearly 0.17% precisely, and Nasdaq also closed flat to negative. So they're all on the three major on a pace to snap a 3-week winning streak. And what happened yesterday also, the kind of geopolitical tension, China stimulating its economy. So these two concerns are spooking fear in US markets also. Now there's one very key trigger which has to come that could act as a very big catalyst for the US markets, could be September's job report, which has to come on today morning with the US time. And this could be the big catalyst only if it comes below expectation. This is what the economists are penciling in right now. Similar kind of move we have seen on oil also. We'll track it separately. But yes, talking about US, it closed on a negative note, shaky start to October, and October seasonality, as per the data, also suggests US month has not done very great in the month of October. So we'll have to watch it, because in the year of the presidential election, this month actually plays a very big significance, and it is mostly on the lower side only.
Well, absolutely. And as you said, let's also take a look at US crude oil, because there you're seeing a rise of about 5% coming in, posting a third consecutive session of gains on fears that Israel could strike Iran's oil industry in retaliation for Tehran's ballistic missile attack. This week as well, now US President Joe Biden was asked by reporters whether the US would support an Israeli airstrike on Iranian oil facilities. And he said discussions are ongoing. Of course, we'll be getting you more updates on this later. But then when you take a look at the move coming in for this week, the US benchmark surged 5.5% earlier in the session to an intraday high of $73 thereabout per barrel. And when you take a look at WTI as well, you're looking at a gain of about 8% this week, on pace for its best weekly gain since March 2023 as well. When you take a look at the move coming in for Brent as well, you're looking at an uptick coming in of just about 5%. $77 is where Brent was also at. So that largely is the picture that you're seeing emerge. When it comes to oil prices, of course, OPEC Plus's decision in December is going to be something that we're going to be closely watching out for. But as of now, what really is in the spotlight is all of the geopolitical tensions. In fact, we earlier caught up with Santosh Rao, head of research and partner, Manhattan Venture Partners, as well as Anurag Singh of Ansett Capital, as well as we discussed about how demand and supply of oil may be impacted amid the ongoing Middle East tensions. Then let's go across and listen into what they had to say then.
I don't think there is enough supply, and US is a big supplier there. So I don't think there is a issue of shortage or prices hiking up at this point. The worst estimates I've seen is maybe another between 70 and 80. That's it. And I haven't seen any estimates of 100 plus yet, based on what's going on. So because there is enough supply in it, and then China is slowly coming back on, so that might add some demand there. But there is enough cushion from what I've read from the oil experts, that they can handle the demand that's coming in.
None of the analysts had predicted that oil will basically go below 70, and that was a bit of a low. So I think somewhere there was a catch up to be had, and so expect the oil to be between 70 and 80 at least. And after the US elections, of course, it will also find its level based on the policy that the new government adopts. But I think in terms of Middle East, the markets have really moved on from there.
Let's get you in detail, since we continue to bring you the latest on what is brewing in West Asia. Tensions between Israel and Iran. A powerful blast rocked Beirut overnight in some of the heaviest Israeli strikes in the city so far. 37 people have lost their lives and over 150 have been wounded in the strikes overnight. This is as per the Lebanese Health Ministry data. Now, Israeli offensive have intensified in Gaza and occupied West Bank as well. Now, the head of UNRWA says at least 21 Palestinians were killed as 3 UN-run school shelters were also attacked by Israeli forces in the Gaza Strip over last 2 days. The reports also suggest that currently Iran has conveyed a message to Washington via Qatar saying that it does not seek regional war, but the phase of unilateral self-restraint has ended. In the latest comments coming in from the United States on being asked whether the US would support an Israeli strike on Iranian oil facilities, President Joe Biden said that discussions are ongoing regarding the matter. As a reaction, like we said earlier, US crude oil jumped 5%, posting a third consecutive session of gains. And in fact, let's get to our reaction also. We caught up with Daniel Carman, who's a former Israeli ambassador to India and even the spokesman for Israeli embassy in New Delhi to understand their views on the rising geopolitical tension in the Middle East.
There will be a retaliation. Iran must and will pay a heavy price for this attack, this brutal attack on Israel, which luckily, and not only luckily, because of the Israeli technology and some help with from partners, regional partners, US, Britain, France, and others, luckily the damage is minimal. But it doesn't matter. Iran was warned ahead of time by the international community, and Iran will receive and will have to pay, as I said before, for what it has done.
I think it is the lull before the storm because Iran did make a great decision and they are going to pay back for their actions. You know, firing 180 missiles on any country, ballistic missiles with each missile containing about 1 ton of fire within it, of the capability of blowing down a complete building and throwing 180 of those. No country in the history of the world has ever experienced something like this. So of course they're going to get a response. When exactly it's going to happen, I don't know the exact timing, but I can tell you it is something that is going to come. And yes, now it's the lull before the storm.
All right, there you go. So then that is the latest that is happening with the West Asian tensions. Moving on, then shifting focus to commentary coming in from central bank officials. Then Bank of England could move more aggressively to cut interest rates if inflation pressures continue to weaken. Now, Governor Andrew Bailey warns against oil shock risks as well. Says flaring tensions in West Asia could push prices higher with respect to rate cuts. Then Bailey also said that the central bank could become a bit more activist and a bit more aggressive in its approaching at policy easing as well. So that's the latest coming in when it comes to Andrew Bailey's commentary.
All right, and even Federal Reserve Bank of Chicago President Austin Goolsbee, he also reiterated that interest rates needs to come down over the next year by a lot. Additionally, he also emphasized how the central bank's narrow focus on inflation has expanded to the jobs market, adding he would like to keep the unemployment rate currently at 4.2% from rising any further. Remember, Fed watchers are now turning their sights to policymakers' November meeting, while forecasts released last month signaled officials are likely to offer smaller quarter point cut at the central bank's last 2 meetings this year, and the size of any reduction will depend on how the economy evolves.
Alright, then moving on, let's take a look at US services sector activity. Then jumped to a 1.5-year high in September amid strong growth in new orders. More evidence that the economy remained on a solid footing in the third quarter. The non-manufacturing purchasing managers index also accelerated to 54.9 last month, the highest level since February 2023, from 51.5 in August as well.
All right, now let's shift focus to festivities, and now the festive fever that is starting, that has already set in. What makes it to vibrant India's festive wish list, and what are the malls penciling in for the firecracker of a festive season? 18 Hours Aishwarya Patil answers all those questions and more with word coming in from diverse voices.
It's October, beginning of the festive season, a fresh start for all of us. And like every Indian family, we save the bigger and better things for the end of the year. So let's get to know what a firecracker of a wish list our discerning consumers have this festive season.
Diwali is about cleaning the house, decorating the house, buying new things.
I would want to go back home to Bhubaneswar and celebrate Diwali with my family over there. That's on my wish list.
This Diwali we are looking for, we have certain things that we plan to buy every Diwali. So like for this Diwali we have a laptop to buy for my father and some silver utensils for my mother. That's it, that's sorted.
New clothes, new shoes every season, every festival. So who needs an excuse? And it's Diwali, the biggest festival. So you obviously need everything new, new suit, new shoes, new bag. We got new bags. So yeah.
For the family man, actually kids, we have priority for the kids. Whatever they want to buy for their personal needs. Actually, younger ones need some gadgets.
But exactly for Diwali, just to shop or to spend some time with the family, and I think that's the only plan I have as of now.
Whatever the marketing and promotion budget that malls have for the whole year, at least 50% is spent in these 3 months. And I'm sure the same goes with the retailers as well. There are no discounts as such, which is passed on to retailers during October, November month. We're expecting 1 million footfalls a month in October, November, December. But usually it is about 600,000 to 700,000. So there's about a 50% jump that we see.
While Forum Malls is setting its bar higher on customer experience and curated events to attract more footfalls, Phoenix Mills has a 100-day Phoenix Festival planned ahead of the festive season.
Palladium specific October, we would be, our expectations and our projections are closer to 230 crores and above, if not closer to that. Whereas the other Phoenix centers, which is of, on an average, we should be doing across all other centers on an average, should be easily about 130, 140 crores on an average.
Malls and brands across categories are gearing up to welcome their patrons with curated experiences, events, and a whole lot more to fulfill their festive wish list. In New Delhi, this is Aishwarya for ET Now.
Alright, so there you have it. So those are the expectations when it comes to the festive frenzy, and we'll definitely be keeping a very close eye on that. But for now, it's time for a quick breather on the show. When we come back, we'll take a look at how the Asian markets are faring, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. And Asia Pacific markets are largely trading mixed at this point because you do have the losses coming in on Wall Street as well as Middle East tensions that we're keeping a very close eye on. When you take a look at the ASX 200, you're looking at a shade of red coming in, 0.7% of a decline coming in for that one. Let's also take a quick look at Nikkei because Japan's Nikkei is currently trading in the green on your screens, 0.4% uptick coming in for that one. When you take a look at South Korea's Kospi as well, a shade of green coming in for that one as well because that is also trading about 0.8% higher as we speak. When you do look at Hong Kong's Hang Seng though, that is the index that slipped 1.2%, 1.3% in its first hour of trade, has given up all of those losses at this point. Shade of green coming in for that one as well, 0.2%, 0.1% uptick for Hong Kong's Hang Seng as well. Now, of course, markets in mainland China will be reopening on October 8th as well, and they have been shut all through this week, so not much of a queue coming in from there. But as of now, all of the indices that are trading currently are just a little bit of a mixed bag coming in when it comes to the Asian markets. Now, of course, back home, we closed around the 25,250 levels, and currently what the Nifty implied is penciling in at this point as a start around the 25,435 levels. So with that weak handover coming in from Wall Street, though, it just does remain to be seen how we fare throughout the course of this day.
Absolutely. In fact, GIFT Nifty has been very volatile. If you see, just a few minutes back, it was trading with minor losses. Now it's just turned out to green and flipping into flat. So let's see. But then, of course, we don't fall every day 500 points. There was a big crackdown which came yesterday. Let's see. Are we in for a recovery mode, or we would consolidate for some more time here? We'll have to see. But then
Welcome back. Thank you so much for staying tuned in. Well, Swiggy continues to create a buzz. The company has now increased the size of the primary issue of the offering from 3,750 crores to 5,000 crores. Now the OFS element remains unchanged at 6,664 crores. Let's also go across to Sharad, who's standing by with more details. Sharad?
Well, it's an important development coming in for Swiggy, and media reports suggest that the overall size of the primary issue has increased from 3,750 crores to almost 5,000 crore rupees. Now, of course, the OFS element remains the same, and as per the unlisted deals in the markets ranging between 6,500 to 7,000 crore. That means overall, the Swiggy's IPO size would be more than 11,000 crore rupees. Now, of course, the key buyers in the unlisted space and the buzz is there coming. The larger folks are there like Amitabh Bachchan, Madhuri Dixit, Karan Johar, Ashish Chaudhary. These folks have actually taken participation in the secondary markets as well. Now let's see how Zomato and Swiggy pan out. At first we are going to see the FY24 numbers, and of course the PAT is something to watch out for these companies, and Swiggy is still not profitable while Zomato on the other hand is profitable. The overall average order value that remains almost roughly the same. And of course if you look at the FY24 numbers for the operational metrics as well, that is also weighing in on Zomato's side overall. And of course the market share, resprint data, is almost 54% for Zomato. And overall if you look at the valuations, overall the expected valuation for Swiggy's IPO expected to be range between 15 to 18 billion dollars, while in the listed space Zomato's valuation stands at roughly 29 billion dollars. Apart from this, there are certain growth numbers also which we would like to point out. The first quarter and as well as the FY24 numbers, if you look at Zomato and Swiggy, Zomato is having strong numbers, especially when it comes to the food delivery GOV. GOV is nothing but the gross order value, operational metric to track, and also quick commerce, the dark stores growth. If you look at it, Zomato is having a higher growth in both FY24 as well as the first quarter of FY25.
Sharad, interesting research that you brought in. But stay with us. We have another story coming up. Now the quarter update has started coming in, and it was a weak quarterly update from D-Mart also. Now the Q-commerce the rise in Q-commerce has led to the growth slowdown for this company as well. Mixed set of views coming in from the brokerage houses. Now Goldman Sachs maintains a sell rating. Morgan Stanley and Macquarie, they maintain their bullish stance. Sharad joins in with all the details. Sharad, over to you. What are the notes saying now?
Well, weak set of numbers operationally coming in for the second quarter for Avenue Supermarts. Goldman Sachs has maintained a sell rating at the target price of 4,050 rupees. They have stated there is a sharp growth slowdown has likely impacted because of quick commerce, and there might be moderation in growth, especially in their SSG numbers. Now, they have also cut down the FY26, FY27 EPS also by 2%. Morgan Stanley, on the other hand, they have stated that the overall numbers, the growth were below expectations, and still they are awaiting the clarity of management on a slower growth rate and why it's happening. The standalone revenue is expected to come at 5%. That was below the estimates for Morgan Stanley. Even Macquarie has sounded a cautious note, especially the store additions part. Those numbers were slightly below estimates, and a sequential moderation in gross margins is expected to change in the product mix, and that is why those margins have been impacted in the second quarter. So a cautious and a weak set of numbers coming in from the company, and even the brokerages have kind of given a cautious guidance for this.
Thanks, Sharad. So that's the update coming in from Brokerage Radar. But moving on then to some important commentary, Zomato has had an impressive run, and that's the word coming in from Aswath Damodaran, Professor, Stern School of Business, NYU, California. A rare voice on the channel. Let's go across and listen into what else he had to say then about Zomato's journey and valuation picture.
Zomato has been impressive on some fronts. Its Blinkit acquisition allowed it essentially to start expanding its delivery business into groceries, electronics, and potentially, if you look at Zomato now, the story you would tell about the company is not so much of a delivery company anymore. It's almost like a last mile company, which is in India, that last mile is torturous because of traffic and congestion and infrastructure. So if you're a mile away from your laundry and you want to pick up your laundry, that is a 1 hour trip. Zomato, in fact, exploiting the fact that it's strange. It's living off the fact that Indian urban infrastructure is broken. And because it's broken, you need a company like Zomato doing stuff that you used to do 20 years ago on your own. So I am impressed by the expansion. What I think the market might be missing is you're entering a very different kind of business in terms of profitability. I value companies because I'm fascinated by them. I don't care if I get them wrong. I'm fascinated by them because they're changing. So there are things that Zomato's done that I look and say, that's really good, and things where I have questions. And that's the basis for valuation. Does it mean I'll get it right? I mean, the reality of the valuation is you're right for a very brief moment of time. Then you're going to be wrong again if you measure right and wrong based on the price being different from value. So I think Zomato might become one of the companies I revisit. And if there are other young companies that catch my attention, I'll add them to my list. But you will know, because when I do a valuation, I almost always write about it, because to me, I mean, it drives my decisions, but it also means that the reason I write about it is I now cannot back away and say, I never said that, right? Because it's right there on paper.
All right, that's a power-packed conversation. You can watch the whole day on ET Now as well as on our social media platforms also. But then now moving on to an ET Now exclusive, my colleague Anurag Shah caught up with IRDAI member Satyajit Tripathi, who says Bima Sugam platform is likely to be launched soon. In fact, insurance companies will have freedom to decide platform also. Listen in to what else he had to say about this entire matter.
Bima Sugam was envisaged to provide an exchange-like facility for purchase and sale of insurance policies. We always believe at the regulator place that the insurance should be reaching the last mile of this country, and particularly the hinterland. The sole purpose of establishing an entity like Bima Sugam and providing the facility for the people by and large across the country to buy insurance in an easy way, and after understanding all the nuances of the insurance, and also in future to settle their claims through the exchange facility that is being developed. So it will be totally a technology-driven platform like an exchange where policies can be bought, policies can be sold by companies across the country.
Okay. So can we say that some cost will be less at the Bima Sugam platform, or it's very early to speak about that?
I think it is early to speak, but it is for the companies to decide that whatever are the intermediary costs they may be paying to acquire the business, whether they can rationalize that further whenever policies are bought and sold through the exchange platform.
What is the latest update on the complete that Bima Trinity on which IRDA is saying that you spoke about the Bima Sugam, but on the Bima Vahak and Bima Vistar?
The current situation is such that you are also aware that to spread the insurance to the larger part of the populace, the Bima Vahak and the Bima Vistar things have been proposed by the regulator and are also being actively pursued by the various companies.
Alright, then moving on, let's get you some more interesting commentary then on the sidelines of the 10th edition of Google for India event. Sumita Karir caught up with the recently appointed MD of Google India, Roma Datta Chaube. She says India is a focus market for Google, and also they're planning to scale up the mobile phones manufacturing in India. Let's go across and listen into the word coming in from the management then.
We are really focused on three key pillars. The first one is really making AI real for every Indian, and we'll do that by leveraging AI to democratize information and opportunities. When I talk about opportunities, we've spoken about skilling and many more initiatives today. The second one is how do we contribute even more significantly to the entire AI ecosystem in India, right? So we will continue to invest in infrastructure, continue to help build the AI engine, and of course do it in a very, very responsible, sustainable, and inclusive manner.
But Roma, do give a detailed picture of how are you looking at leveraging or capitalizing on this AI opportunity that that the world presents and that India presents?
For Google, India has always been a very focused market. A few years back, we had announced our India Digitization Fund.
Yes.
We have been 100% committed in playing a very important role in digitization of India. We've had several initiatives over the years. So.
All right, moving on, let's get you some outcome from the cabinet meet which recently happened. Now, Diwali bonanza for railway employees as the government has nearly 2,090 crore bonus ahead of the festive season. Moreover, cabinet has approved 1 lakh crore financial outlay for PM Rashtriya Krishi Vikas Yojana as well. Prakash Priyadarshi is joining us with all the details on this piece of news.
The Indian cabinet has taken 6 major decisions, and the first one is with regard to agriculture sector and middle class, where the cabinet has given its nod to 2 new schemes called PM Rashtriya Krishi Vikas Yojana and Krishi Unnati Yojana with an overall financial outlay of rupees 1,01,000 crore. These two schemes set up multiple programs based on agriculture sector, and that will be carried out in a collaboration with the state governments going forward. In addition to that, the Indian cabinet has also approved National Mission on Edible Oils, a scheme which has potential to make India Atmanirbhar in oil seeds production in next 7 years, and the cabinet has approved around rupees 10,000 crore for this scheme. Along with that, the cabinet has also approved a proposal for construction of Chennai Metro Phase 2 with an outlay of rupees 63,000 crore. Chennai Metro Phase 2 will cover 119 kilometers, being implemented by Chennai Metro Rail Limited under a 50-50 sharing model between central and state governments. Along with that, the cabinet has also given its green signal of India's decision to join Energy Efficiency Hub under IEA. Some festival bonanza for the central government employees as well, especially port sector and railways employees, where the Union Cabinet has decided to approve productivity-linked reward scheme for port employees. Also, productivity-linked bonus for railways employees has also been approved by the Indian Cabinet. A bonus amounting to 78 days of their wages has been approved, and the Cabinet has provided rupees 2,000 crore for this scheme. That will help more than 11 lakh railways employees going forward.
All right, thanks Prakash for that update coming in. On the cabinet meet, let's also go across and listen into what Union Minister Ashwini Vaishnav then had to say about this financial outlay and what really is the rationale that he is penciling in terms of what this particular financial outlay means that Prakash just talked about.
हमारे मिडिल क्लास परिवारों के जो थाली में जितने आइटम होते हैं, मेन आइटम्स, उनमें कैसे हम आत्मनिर्भर हों और कैसे एक एक करके उसमें फैसिलिटीज बढ़े, उसका एक बहुत ही होलिस्टिक तरीके से इस आज के कैबिनेट में एक विस्तृत योजना रखी गई है। 2 बड़े एलिमेंट्स हैं। एक तो है पीएम राष्ट्रीय कृषि विकास योजना, दूसरी है कृषि उन्नति योजना। और ये प्रोग्राम 1,01,321 करोड़ रुपए का, 1,01,321 crores. It's a very big program. It has multiple components. Many of the components have already been approved by the cabinet as separate schemes. And some of the components will be done by the ministry, and some more will come into the cabinet for complete approval.
All right, so some crucial takeaways coming in from cabinet meet. Now we stay for a short break here. On the other side of the break, we get you the news that sets you up for the trading day today. All the stocks that would be buzzing in trade, as well as brokerage notes and the FNO snapshot notes. So don't go anywhere. Welcome back. You're watching Market Cafe on ET Now. This is Priyanka Uppal, and now time to take a check on the FNO space, derivative space. Ansh joins us to tell us more about what happened yesterday. Ansh, intense selling, what we saw. Of course, there was a good quantum of FI selling. DIs also bought in a big quantum. But what is the state looking like? How aggressive the short built-up is looking like right now?
Well, if you start with FIS, then in previous session we are seeing that in index futures specifically, they have covered their longs by around 98,000 contract, and they have added some shorts of around 57,000 contract, due to which the total long position has drifted lower from 79% directly to 66%. So we can say that they are booking the losses here. But if we talk about clients' position in index futures, then in long side we are seeing that they have added around 62,000 contract on upside, and they have covered around 73,000 shorts. So we are seeing that they've undergone profit booking here. Now if we talk about a Nifty, then Nifty has actually slipped below its 20 DMA, which was acting as a good support, which is a very bearish sign for the coming sessions as well. Whereas in index future we are seeing a trend open interest going down by around 8%, indicating long unwinding, which is again a cautious sign. Whereas on option front we are seeing very strong call writing happening at that 25,500 psychological mark, indicating option traders expecting strong resistance around this level. Now if we talk about Nifty Bank, then Nifty Bank has also slipped below its 20 DMA, and its key support is around 50 DMA, which is around 51,500 mark. Now if we talk about index futures, then here also we are seeing that open interest has dropped by 25%, indicating long unwinding. Whereas on option front we are seeing mild to most active call writing happening at 53,500 mark, indicating strong resistance around this level. So keep an eye on these marks.
Well, absolutely, Ansh. We'll definitely be keeping an eye on that. But let's get a little more stock specific then, because JP Morgan has maintained an overweight stance on Coforge and upped the target price as well on the back of consolidation of Cigniti from the second quarter. Tell us a little more about the key takeaways of this note then.
They have maintained overweight rating on Coforge. The target price they have also increased from 6,900 directly to 9,300, because currently the current market price is just above that 7,000 mark. So we are seeing around 30% upside here. Also, they have said that this revision is driven by consolidation of Cigniti from quarter 2 of FY25. Also, the earnings are projected to grow by 15 to 20% over FY25 to 27. Also, Cigniti is expected to outpace Coforge organic growth, and the share swap ratio could be lower than the previous anticipated. So for those reasons, the stock is in focus today.
Alright, so let's see how it pans out. Coforge, we'll keep a watch on this particular stock. Probably that's the time, maybe the IT stocks doesn't get hammered that bad. But let's see, the comments help stock recover a bit or not. Thank you, Ansh, for that detail. Now, Ria is joining us to get us more sense of the stocks that could be buzzing in trade today. Ria, now the quarterly updates have started up. Tell us which all updates did you track?
Yes, good morning. So, a lot of companies have come out with their Q2 FY25 updates. First up is Bank of Baroda with a good set of numbers. Now, the advances have come in at rupees 11.4 lakh crores, up around 11.6% over the previous year. The deposits have also shown a growth of around 9% over the previous year, coming in at 13.6 lakh crores. There's also M&M Finance, which has posted an inline set of numbers. Now, on this front, the business assets have come in at approximately rupees 1.13 lakh crores, which have shown a growth of around 20% over the previous year. The collection efficiency has remained constant at 96%, and the company has a liquidity chest of over rupees 8,500 crores. Now, while the disbursements did go down about 1% to rupees 13,160 crores in this quarter, the H1 FY25 disbursement has actually gone up around 2% to 25,900 crores. We also have Avenue Supermarts reporting their Q2 FY25 updates, although a weak set of numbers here. Now, while the revenue did go up around 14% on a year-on-year basis to around 14,000 crores, on a sequential basis there has been some subdued revenues here. We also have Indian Oil Corporation in focus today, since the company has signed B2B framework agreements with Nepal Oil Corporation for a major petroleum infrastructure development project in Nepal. Lastly, we have two pharma stocks that we're keeping an eye out on today. First up is Alembic Pharma, which has received a US FDA final approval for its ANDA alkaftarine ophthalmic solution for the 0.25% solution. And with this, Alembic now has a cumulative total of 216 ANDA approvals from the US FDA. And lastly, we're also keeping an eye out on Shilpa Medicare, for which the company's subsidiary Shilpa Pharma Life Sciences has received the CEP approval from EDQM for the API desmopressin. So we're keeping an eye out on all of these stocks today.
Well, absolutely, Ria. Thank you so much for that update coming in. But with that, we're completely out of time on this edition of Market Cafe on ETNA. From me, Shreyansi Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in. We'll see you next week on Market Cafe. But don't go anywhere, because the market takes all of the action forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.